2025 was the year Ripple stopped being the company stuck in a lawsuit and started acting like a full-blown global financial infrastructure player. At the same time, XRP had one of its most emotional years yet, a surge, a headline run, and then a reminder that markets can still be brutal. In this video, I'll walk you through Ripple's biggest accomplishments in 2025, what happened with the SEC case, why Wall Street took Ripple seriously, what changed for XRP, and the realistic future for both. This is Express Econ Geo Finance Insights. Let's get into it. First, the biggest domino in 2025, the SEC case. For years, one question controlled everything: is XRP a security? In August 2025, that saga essentially ended. Ripple and the SEC agreed to dismiss their appeals, locking in court outcomes already moving in Ripple's favor. Practically, that meant retail trading of XRP on public exchanges wasn't treated like a securities transaction. Ripple still faced consequences tied to certain institutional sales, including a fine, but the endless uncertainty finally eased. When crypto gets US clarity, money moves. That resolution did two things. It opened Ripple's US strategy and gave XRP a cleaner narrative for institutions. 2025 wasn't just a legal year, it was an expansion year. Ripple went shopping. In April 2025, Ripple announced a deal to acquire prime broker Hidden Road for around $1.25 billion. Prime brokerage is the plumbing institutions need to trade at scale: clearing, financing, settlement, and risk tools. By buying Hidden Road, Ripple signaled, "We're not just a crypto company, we're building institutional-grade infrastructure." The goal: bring more post-trade and settlement efficiency into digital assets, aligned with Ripple's ecosystem. Later in 2025, Ripple announced a $1 billion acquisition of G-Treasury, a treasury management software company. Treasury management is how corporations manage cash, payments, liquidity, and financial risk. This is where CFOs live day to day. Why does Ripple want that? Because it points to Ripple's direction, foundational rails for enterprise payments and liquidity, using stablecoins, tokenized assets, and possibly XRP as a bridge asset. Throughout 2025, Ripple behaved less like a startup and more like a future category leader. By year's end, a major investment round valued Ripple at roughly $40 billion, a clear bet on the strategy. Ripple's stablecoin, RLUSD, became a serious part of the 2025 conversation. By late December, RLUSD crossed the $1 billion market cap mark. Real demand, not just retail hype. Stablecoins are digital dollars designed to hold a dollar. They're great for settlement and payments. Bridge assets like XRP can shine in cross-currency flows without pre-funding. RLUSD's growth doesn't replace XRP. It shows Ripple is building a toolkit, the right tool for the right job. Ripple pushed the modernization narrative. Settlement speed, cost, transparency, and programmability for enterprises. The direction is clear: regulated rails, institutional settlement, and interoperability between fiat, stablecoins, and tokenized assets. Treasury desks increasingly need to manage stablecoins alongside traditional assets. RLUSD slotted into that reality in 2025. When the rails get better, adoption follows, and finance cares about speed, certainty, and compliance. Let's talk about another headline that changed perceptions: banking and core payment access. Ripple applied for a U.S. national bank charter and pursued deeper integration into traditional payment infrastructure. That alone is a big deal in perception. It signals, operate inside the system, not beside it. Access to core rails is where enterprise trust is built. It's the difference between pilots and production at scale. Institutions care about compliance as much as code. Ripple's 2025 moves spoke that language. Result: more serious conversations with banks, more payment corridors, and a clearer institutional roadmap. This is the flywheel. Better rails bring adoption. Adoption brings liquidity. Liquidity improves pricing, and that attracts more adoption. Now, let's talk about XRP's year, because it had a storyline of its own, drama included. As legal clouds lifted and markets rotated, XRP surged hard at points, then cooled as macro pressure and profit-taking returned. XRP trades like a market asset and represents a long-term utility vision. That's why it can rally and retrace even as fundamentals improve. Risk on. It can rip. Tightening liquidity. Whales take profits and appetite fades. It pulls back. But beyond price, it's about role. XRP is designed to be a high-speed bridge asset for cross-border value transfer with low transaction costs. The thesis: institutions don't want capital trapped everywhere, they want liquidity on demand. If that model scales, XRP's utility scales. As utility expands, the investment narrative can shift from pure speculation toward durable demand linked to real payment flows. Path 1, Ripple continues shifting into institutional infrastructure, more bank partnerships, more payment corridors, more enterprise deals, and more settlement using modern rails. Think reliable APIs, compliance tooling, and integrations that let institutions move real size reliably. Path 2, stablecoins grow massively. Ripple wants a seat at that table. If stablecoins become default settlement for global commerce, someone must provide rails, compliance, custody, and enterprise tools. Ripple is positioning to be that provider, aligning RLUSD with the broader enterprise stack. Path 3, XRP's future depends on demand for bridge liquidity within Ripple's payment networks. If corridors prefer stablecoin to stablecoin everywhere, XRP's role gets more specialized. If on-demand liquidity grows, XRP strengthens. Either way, execution and adoption decide the outcome, not slogans. Why did Wall Street suddenly take Ripple seriously? The credibility stack clicked into place. Legal clarity removes a career risk for institutions. Rails plus software can produce recurring revenue. Music to an investor's ears. Prime brokerage, treasury software, and stablecoin settlement form a coherent enterprise story. Add real risk controls and auditability. Now you're speaking Wall Street's language. Liquidity attracts liquidity. Healthy markets reduce frictions, which reduces costs. And with tokenization surging, firms need multi-asset infrastructure, not single-asset hype. That's why deal flow picked up and the valuation climbed. Put simply, Ripple looks like a future rails provider, not a speculative bet. So, what should you watch next? 1. Whether the bank charter and regulatory moves progress further. 2. Whether RLUSD continues growing in adoption and real use cases. 3. Whether Ripple announces major new enterprise payment wins. 4. Whether XRP usage expands in cross-border flows beyond trading speculation. If these stack up, the Ripple and XRP story stops being just a crypto story. It becomes a global finance story. Ripple isn't fading. Ripple is expanding toward regulated rails, institutional settlement, tokenization, stablecoins, and cross-border efficiency. If you want more breakdowns like this, macro, geopolitics, crypto, and the financial system shifting in real time, like the video and subscribe to Expressicon Geo Finance Insights. Drop a comment. 2025 was the year Ripple stopped being the company stuck in a lawsuit and started acting like a full-blown global financial infrastructure player.